Hi, good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Good morning and thank you for joining us. And here are the top headlines for today. The Central Bank and Nigerian Communications Commission have announced a flat service charge of 6 naira 98 kobo for unstructured supplementary service data services transactions, otherwise known as USSD. According to a joint statement released yesterday by the regulatory bodies, the new service charge takes effect from Tuesday, that was yesterday, March the 16th, for every financial transactions conducted at deposit money banks and all CBN licensed institutions. The reduction in the service charge comes after a resolution meeting with banks and telecom operators in a bid to work out a settlement plan for outstanding payments incurred by USSD services previously rendered by mobile network operators. And so, what will this mean for consumers, the banks, and even the telcos? Bismarck Rewane, CEO of Financial Derivatives Company, joins us now to explain some of the implications of that. Good morning, Mr. Rewane. Thank you very much for talking to us this morning. Well, you operate in the financial services sector. In a layman's term, what is the CBN and telcos trying to do with the USSD payments, and what does that mean for us, the consumers?
Let us tell you what the facts are. The facts are that today you have what we call bundled charges and unbundled charges. So every day or 12 midnight you get a debit alert from your bank saying maintenance fee, that fee, cloud fee, rain fee, transport fee, and all that. So all of those things are put together in what they call bundled charges. Then you have unbundled charges where they debit you directly, say for COT or some other things and all that. All of these things are actually managed and supervised by the Bankers Committee. Now, what has happened in the past is that for the USSDs use, the infrastructure of the telcos, the banks have charged you 20 naira per transaction and have not passed on any share of the revenue to the telcos. So the telcos drew a line in the sand and said, no, we are not going to accept this anymore. We need our money. So the effect, what your viewers want to know today is that, am I going to pay 20 naira plus 6 naira 98 kobo, making 26 naira 98 kobo? No. What the statement says that you pay 6 naira 98 per transaction, but you know that the most difficult thing to do is to track the transparency of bank charges in this country and in many other countries. So my suspicion is that you're going to be paying, the market will have to bear 26 naira 98 kobo, one way or the other, because to prove what that you are being charged more than the 6 naira 98 will be extremely difficult. But in reality, when you look at it, the truth is that today, the alternative to using a financial inclusion strategy or to using electronic payment and digital method payment is much, much cheaper than you driving from your house to the bank, drawing the cash, going to pay for your electricity bill, then going to load up your things. So by the time you add all this together, you are better off even with 26 naira 95 kobo or 6 naira 95 kobo. But the reality is that this is a high volume, low margin business. Typically, the charges reduce over time because when we had 5 million subscribers only, the average cost was high. Today we have over 120 million active subscribers. Therefore, the cost should actually be lower. That is why initially we paid 50 naira per minute for voice calls. Today we are paying less than 5 naira a minute for voice calls. Initially we paid 20 naira a minute, 20 naira per SMS message. Today we are paying less than 5 naira or so per SMS message. And that is true.
All right. Thank you very much, Mr. Rewane, for explaining that for us. Well, Ladi,
yes, it makes sense.
You heard that perhaps one way or the other, we are the ones to probably pay for those charges that the banks were unable to remit to the telecoms.
Yeah.
So,
but remember, Chimeze, sorry to cut you.
Yeah.
Remember that the telcos have spent average of $3 billion of capex every year over the past 10, 20 years. The base stations, the transmitters, and all of that. So, and because it is capital expenditure, it is not expensed directly. They need to amortize it. So there's 43 billion naira of arrears which the banks have to pay. So what you are going to see this year is that bank earnings are going to be taken, they will take a hit of 43 billion naira.
Okay, we seem to have lost Mr. Rwande there. Well, I'm sure he's just trying to explain perhaps how this will also impact on the earnings, not just for the telecoms and, of course, for the banks. Of course, if the banks would probably, if this is how it is, the 6 naira, whatever, kobo now goes to the telcos, and then the banks are not getting anything, that, of course, will affect their earnings. So, and that is why, I mean, it's suspicious.
Well, at least we still pay the bank charge.
I'm sure they would probably still deduct the 20 naira and still have the 6 naira that will get to the telcos. Because now, who knows? Who is the winner now? Perhaps the telcos. But we'll see how this goes.
But at least, thank God, they were able to solve this problem, because imagine not able to use the USSD code. But you and I are going to bear the cost somehow. Yeah. Okay. Well, in spite of the COVID-19 pandemic, which crippled, among other things, economic activities in 2020, one of Nigeria's Tier 1 lenders, Zenith Bank, recorded a 5% increase in its gross earnings, placing its result for the year ended December 31st, 2020 at 696.5 billion naira from 662.3 billion reported the previous year. According to the bank's chairman, Mr. Jimovia, who spoke at the 30th annual general meeting of the bank, the result was achieved through the resilience of the brand, as well as the ability of the bank to leverage the innate opportunities within the environment. To take a listen.
It's the 30th annual general meeting of Zenith Bank holding in Victoria Island, Lagos, with high regard to COVID-19 protocols, which sees some members of the board joining virtually. The chairman, Mr. Jimovia, opens the meeting and presents his statement. In his words, Zenith Bank is committed to building a more sustainable and inclusive economy. As such, we have continued to integrate sustainability principles in our business operations and investment decisions in line with global best practices. The high point of the meeting was, however, the financial report, which highlights the impressive performance of the bank in the year which has now been tagged a pandemic year. Highlights of the financial report include gross earnings increased by 5% to 696.5 billion naira from 662.3 billion naira in 2019. Profit before tax increased by 5%, growing from 243.3 billion naira in 2019 to 255.9 billion naira in 2020. And a 2 naira 70 kobo final dividend after paying 30 kobo interim dividend in December 2020.
We shareholders are really happy with the performance of the bank. An earning per share of over 7 naira and a dividend of 3 naira despite COVID-19. This is very, very encouraging.
You have owner-manager in place who, of course, his focus is to ensure that whatever investors have put in there will continue to grow.
With the accolades from the shareholders, the Group Managing Director, Mr. Ebenezer Onyanwu, is confident that activities in equities markets, especially around the bank's shares, will drive the stock exchange into the green zone.
At the outbreak of the pandemic, Zenith share price was as low as 11 naira. But even with the dividend payout and the markdown of our dividend payment, our share price is 21 naira currently.
The management promises that if the bank could excel in the pandemic, then 2021 will deliver better benefits to its customers and shareholders.
Well, the latest inflation rate by the National Bureau of Statistics did not come as a surprise to many economic analysts, but remains a cause for concern for many. The headline inflation rate rose from 16.5% year-on-year in January to 17.3% year-on-year in February, the highest rate since February 2017. How are investment analysts viewing this data? What will this mean for investment in the country? Bolaho Ologuro, research analyst at Cordros Securities, joins us now. Good morning, Bolaho. Thank you very much for joining us. Well, Nigeria's inflation rate rose for the 18th consecutive month to 17.33% in February. As an investment analyst, how are you reading those numbers?
Yeah, good morning, Chimeze. Thank you for having me. So like you rightly mentioned, we saw headline inflation rising to 17.33% in the month of February. For us, the predominant driver of the uptick in inflation still remains the food basket. And if you look at that index, we saw it inching to about 21%. And of course, this can be attributed to a number of factors. So firstly, I think if you've been paying close attention to development in the northern part of the country, we've continued to see persistent security challenges due to clashes between farmers and herdsmen. So we think that has continued to limit food supply across different parts of the country. And of course, with reduced supply to the market, certainly you expect prices to be on the increase. Aside that, we also think that the lingering impact of the supply chain disruptions we had in 2020 are yet to dissipate. And of course, that is also sort of fueling inflationary pressures across the food basket. And for us, we think this would mean that for consumer good companies, they would continue to grapple with the ability to sort of drive volumes in the market due to the fact that they probably have to pass on higher cost of production to the consumers in form of higher prices. And of course, if you consider the fact that income level for consumers has remained weak, that would mean that we should also expect that consumer good companies, this is probably not a good time for them.
All right, well, looking ahead, what is your outlook over the first half of 2021 and why?
Yeah, so for us, in the first half of 2021, we expect inflation to maintain an uptrend. We think inflation will peak around 19.3% by June this year. And the reason for that is still tied to the persistent security challenges we've continued to see across the country. And of course, despite the partial reopening of the borders, we still think that supply across different parts of the country would still remain below pre-pandemic levels, in which case you expect that consumers would have to pay higher prices for the limited supply of goods available in the market. Aside that, we also think that those supply chain issues we had in 2020 are yet to return back to normal. And of course, that would also continue to feed into higher prices for consumers. And there is also the possibility that government might hike the price of PMS. Currently, it is being sold for an average of about 167, 168 across different depots across the country. But we think with government currently in talks with labor unions, there is a possibility that that would be increased to around 200 naira levels, which would also mean that for manufacturers, they would have to incur higher cost of distributing their products, which would of course be passed to consumers in form of higher prices. So for us, we think inflation would maintain an uptrend in the first half of 2021. We are likely to see inflation decelerating in the second half, as we expect that we should have better harvest compared to last year. So in 2020, a large number of farmers could not go to their farmlands due to compliance with COVID-19 rules. So we think that this year is certainly, I think, a better year in that regard. We should see improved activities on farmlands, despite the security challenges we've continued to witness across the northern part of the country. So we think that would support deceleration in food prices in the second half of the year. In addition to that, we also expect improved gains from the partial reopening of the land borders in the second half, which would also help to ease pressures in the food basket.
How will these latest inflation numbers influence the direction of yields in the fixed income market right now?
Yeah, so for us, we still think that investors, domestic investors to be specific, would certainly continue to demand for higher yields when you consider the fact that negative real returns would continue to widen as inflation continues to trend upward. So in that regard, we think that domestic investors would certainly seek for higher yields as even government decides to raise debt in order to finance the 2021 budget. But what we think is that the Debt Management Office would also try to suppress that increased demand for yields by tactically supplying the amount of domestic debt instruments that I think the market can conveniently absorb without forcing a significant increase in yields. But certainly, we still think that yields still have further way to inch up higher, and we expect that yields on treasury bonds should average at least 10% in the first half of 2021.
So with the sustained upward pressures in inflation, do you see the CBN hiking the MPR at its next meeting holding next week?
Yeah, I think with the consistent rise in inflationary pressures in the economy, it would probably appear that it is increasingly difficult for the central bank to maintain or justify their expansionary monetary policy due to the need to rein in inflationary pressures. But I think the central bank governor at the last meeting, he emphasized the fact that inflationary pressures are driven by supply side factors which are outside the confines of monetary policy. And of course, if you take a look at the latest data from the NBS, it still sort of corroborates the statements made by the central bank governor. So we don't think the Apex Bank would hike MPR from current 11.5%. We think they would still be concerned about the soft growth momentum in the economy. In Q4, the economy exited recession narrowly with just a growth of 0.11%. So we think that growth is still fragile. And in that regard, the MPC would feel that there is the need to still maintain this broadly accommodative monetary policy in order to sort of allow economic growth to gain a stronger foothold. And we think that would probably be by the second quarter of 2021. And we think that should then pave the way for them to revert to a hawkish stance. But for their meeting next week, we think majority of the members will still vote for holding the MPR at 11.5%, just to still sort of douse, I think, the concerns in the yield environment and to prevent another round of sell-offs in the bond market that would mean that governments would have to face significant deficit financing pressures in 2021.
Gbolahan, a quick one before we'll let you go. How should investors reposition their portfolio now, given the continued sell-offs in the equities market and rising yields in the fixed income market?
Yeah, so for us, we think that in the short term, portfolio allocation should be tilted towards the fixed income market. We don't expect that the uptick in yields in the fixed income market would dissipate in the first half of the year, particularly when you consider the fact that debt management office are also considering securitizing the ways and means advances obtained by the federal government from the central bank. So we think that supply of domestic debt instruments to the local market would certainly be higher than what we saw in 2021. And in that regard, with inflation still biased to the upside, investors will certainly demand for higher yields. So we think portfolio allocation should be skewed towards fixed income instruments in the first half of the year. However, looking beyond the first half, I think there are indications that we should see stronger market performance in the equities market in the second half, as we expect that foreign exchange liquidity conditions should improve, given the rally we've seen in the oil market. So we think that will put the CBN in a better position to step up the intervention across different stratas of the FX window. And we expect that that should sort of bring some comfort to foreign portfolio investors who have been net sellers of Nigerian equities. So for us, we think there is a possibility that you might see gradual return of FPIs in the second half of the year. We would be looking at picking up some of those stocks that would be trading at significantly lower levels than their historical trading multiples.
All right. Thank you very much, Gbolahan, for sharing your time with us today. We do appreciate it.
Thank you for having me.
We'll take a break, and when we come back, FX Commodities Market Update is next.
And the total value of commodities traded on the FX commodities market dropped by 85% in the week of 9th of March to March 15th to close at 1.8 billion naira. And the number of contracts also dropped significantly. For details now, let's cross over to Michael Martin, Portfolio Manager at FX. Hello, Martin.
Hi, Laddie. Good morning.
Good morning. Great to have you. Great to have you. So first, give us an overview of the activities in the market in the week under review.
Yeah, so if you look at the table in front of you, it was a pretty red week on the commodities exchange on the week under review, with the total value of transactions traded on the exchange falling by 85% from around 12.1 billion to close the trading week at 1.8 billion. The total number of contracts traded on the exchange also fell by 86% from around 740,000 plus contracts to close the trading week at around 100,000 contracts plus. The total number of deals was also red, dropping by 23% as they closed the trading week at 118 contracts from the previous weeks of 153 deals, rather. The ACI, which is the AFEX Commodities Index, also fell by 3.32% from around 398.79 to close the trading week at 385.57. And lastly, we have the AEI, which is the AFEX Export Index, which fell by 1.11% from 160.69 to close the trading week at 158.90. With regards to the volume traded on the exchange in the week under review, we essentially saw a lower volume traded for commodities like maize, soybean, paddy rice, sorghum, cocoa, ginger. The only other commodities that traded up were sesame, which did a slight number in the week under review, and the recently launched cashew product, which did brilliantly well, trading 3,378 contracts in the week under review. With regards to price traded on the exchange in the week under review, our top gainers for the week was firstly paddy rice, which went up by 7.18%. And you'd have to imagine that paddy rice is a commodity used for household consumption, and it's also used by rice millers. So it went up by 7.18%, gaining 1,320 naira in contract value to close the trading week at 19,700. The only other gainer for the week was sorghum, which went up slightly by 0.66%, and you'd have to imagine that sorghum is also another commodity used by breweries. And for people that are alcohol inclined, it's also used to make certain alcohols like Brukutu, which went up by 124 naira in the contract or in the week under review to close the trading week at 18,866 naira. For the losers of the week, we essentially had soybean, which is a major commodity used by feed mills and also slightly used for household consumption. It went down by 5.20%, losing 1,644 naira in contract value to close the trading week at 30,000 naira per contract. Another commodity which lost in the week under review was maize, which went down by 3.31%, losing 673 naira in contract value to close the trading week at 19,658 naira per contract. And lastly, for commodities in general was ginger, which went down by 2.24%, losing 2,000 naira in contract value to close the trading week at 87,362 naira per contract. We also have the fair trade exchange traded commodity, which, like I said, also lost value, losing 1.65%, and that's approximately 234 naira in contract value to close the trading week at 13,927 naira. And for people that want to get involved in the commodities market or generally want to get more information about the work that we do as AFEX Commodities Exchange, you can always go to our website, which is www.afexnigeria.com. And if you want to get directly invested in the commodities market, you can always download our COMEX app on the Google and Apple Play Store. Once you sign up, a buddy is going to be assigned to you, and they're going to take you through the entire process of how to start investing in the commodities market. So that's essentially, Laddie, all of what happened in the commodities market in the week under review.
Great.
Thank you, Michael. Well, looking at the price fall of maize, you talked about that, and the soybean, what would you advise companies looking to procure these commodities to do in the commodities market?
So the price retracement that we're currently seeing is partly influenced by, as we are all well aware, the CBN grain stabilization program, which was introduced into the market a couple of weeks ago. So that's partly what is causing the retracement in market and market prices for maize and soybean, and maybe even grains in general. Part of it is also due to the fact that we haven't had significant market activity going on due to the fact that a lot of the major off-takers have inventory that they're currently drawing down on, but we expect them to fully draw down on their inventory in the coming weeks, and then we expect them to be reintroduced into the market. So we expect that. So for people who are currently at the trading desk or the procurement desk for some of these companies, my advice would be for them to continue buying, because even just looking at the inflation numbers that were just released yesterday, which inflation went up to 17.33%, it's expected or reasonably expected that prices are going to continue trending upward in the coming weeks. So for people that want to procure, they should essentially just continue buying.
All right, we're finally seeing some movement in paddy rice. Is there any particular reason for this? Hello, Michael.
Yes, Laddie, I can hear you now.
Okay, so I said we're seeing some movement in paddy rice. Is there any reason for that?
So you'd have to imagine that aside paddy rice being a political commodity that can very often be influenced by government policy with regards to border closure and all and that, paddy rice is also a festive commodity, meaning that you tend to see price movement in paddy rice during the times when you'd expect festivities and celebration. And as we are all well aware, Ramadan is coming soon, and also the Easter celebration is coming soon. So very often we see major off-takers, particularly for paddy rice, participate in the market or participate in the market in anticipation of those celebrations so that they can essentially sell their paddy rice for a high price during those periods of celebration.
Now, historically speaking, what are some of the best performing commodities on the exchange with regards to return on investment?
So, if you look at the price data that we have, so just using last year as a proxy for how commodities tend to do generally. So maize, if you look at the closing price on the commodities exchange, maize went up by more than 91% last year alone. Sorghum was also another commodity that did extremely well, going up by more than 100%. Soybean did ever so slightly, going up by 12%, and then paddy rice was also another commodity that did well. So generally, you would expect that grains are enviable investment product for people that are looking for a competitive return on investment. And this year alone, we've already seen more than 30% in maize, and we've already seen more than 41% in soybean. I think generally you can get a comparable return on investment with export products, but that's very often determined by what happens in the exchange rate market and also what happens in the international market. But for people that are looking to invest in the commodities market, I would advise any day, any time for them to buy grains, because grains tend to go up significantly over the course of the season. I mean, the only other way you could have made more money on your investment portfolio last year alone was if you bought Tesla stock or maybe if you bought Bitcoin. But apart from that, I think commodities are always a veritable investment product for people looking for competitive returns on investment.
Well, Bitcoin seems to be making some kind of rounds now. All right, yeah, you talked about your newly added commodity, which is cashew nut. That was flat. In the week under review. What's the reason for that?
So cashew is a very unique investment product, particularly because the season very often lasts a short period of time. It doesn't go up every single week. But as we expect the introduction of new buyers into the market, causing there to be a huge surge in demand. Right. So yes, it's okay that the price didn't move this week, but we expect that in the coming weeks with increased demand for this commodity, given that the commodity has a very short period of time, we expect that the prices will continue trending or should reasonably trend upwards. Yeah.
All right, now, Michael, we will talk about cocoa, but let's just take a short break. Well, cocoa is another commodity traded on the AFEX Commodities Exchange. And Ghana, of course, is the second largest cocoa producing country in the world. It recently announced the shutdown of cocoa exportation to Switzerland and the intention to process cocoa and produce and sell chocolate locally instead. Now, here in Nigeria, cocoa is the country's major agri-commodity export. So how can Nigeria create a more profitable cocoa sector? Let's have this conversation with the investment manager at AFEX, Yusuf Ogumbi. Thank you very much, Yusuf, for joining us. Well, as a cocoa producing country in the same region, what can Nigeria learn from Ghana?
Good morning. Thank you very much for having me. So if you look at the emphasis here, the emphasis is on value addition. And for Ghana to be taking this kind of decision, you would realize that they've gotten some form of status, more or less like this, the big guys in the industry in terms of cocoa supply. So for Nigeria, what can we learn from this? That shows that we need to achieve certain elements that Ghana has achieved before we can take these kind of decisions. And first of all, we typically don't have the superior quality that Ghana has, so we need to work on that. We typically don't have the market infrastructure that Ghana has, which is solid, very solid on their end. So we need to work on that as well. In addition to that, we also need to build our productive capacity. So if you look at the productive capacity in Nigeria, we have a lot of aged trees, and we need to bring them up to speed, improve productivity. And at the end of the day, the key thing here is to be at that level where you have your qualities fixed, your market infrastructure fixed, and then the productive capacity fixed as well. And I think at that point, we could be considering these kind of situations.
All right, Yusuf, is it a viable move to make in the immediate term as a country with little production infrastructure and a high cost of financing?
So for us in Nigeria, we still have some hurdles to cross. So it's a decision that can be taken, but maybe not in the immediate term. So we need to cross these hurdles. Like you said, the infrastructure needs to be fixed, the rural linkage roads needs to be fixed, the market infrastructure, like I said earlier, needs to be fixed, the quality needs to be fixed, and these hurdles, we need to cross them. So if we cross these hurdles, I think it will be a viable option. Value addition is always a better option than selling the raw cocoa beans. And if you look at the overall value chain, just 6% accrues to the production end of the value chain. The remaining 94% accrues to every other person in the value chain, and you typically want to earn more in the value chain. So it's a good decision, but then we need to fix these issues first before we can then begin to look at this option as well.
Yeah, so Ghana is creating a market for their local chocolate as one of the benefits of the shutdown. Now, is there any potential for homegrown cocoa products in Nigeria?
Yeah, massive potentials, massive potentials. Yeah, in Nigeria, we might not consume chocolate as much, and in the rest of Africa, honestly, we might not consume as much chocolate as they consume in Europe, North America, but then we consume some other byproducts of cocoa. So take, for instance, cocoa powder is what is processed into Milo for us, the Bonvita, the beverages we take. We also have cocoa mass, cocoa butter, which is used in some other in producing some other products. And I think these items are critical. So if we have these items that are significantly consumed in Nigeria and the rest of Africa, we can begin from there, think of how we can process into these products, and then we can continuously build our chocolate demand. For Ghana, it's a good decision to try to ramp up or stimulate the consumption of chocolate in Ghana. And I think it's something that is good, but then these byproducts, we should not also forget them. They have significant markets in Nigeria, Ghana, and the rest of Africa.
All right, so what are the constraints faced by the cocoa sector, and how is AFEX solving these issues?
Yeah, thank you. So if you look at the cocoa sector, I've mentioned some of these constraints earlier. Our productive base needs to be improved. We need to establish new plantations, increase the productivity of the current ones. We need to build solid market infrastructure that aids transactions in the market. We need to develop significantly our quality levels. We need to get to that point where our goods are not being rejected at any point in time. So if we get to that level, that's where we need to, those are those hurdles that need to be crossed. So FX, in our own case, we have two key interventions in this market, solutions in this market. So the first one is farmer engagement and training, where we capture these farmers. Over the years, we've progressively increased the number of farmers in our capture. We train them, we capture them under the financing scheme, input financing scheme. And basically, this is to solve the issue of productivity, the issue of quality. On the other hand, you have the warehouse network, the market infrastructure network, and this is to help increase the transaction volumes, transaction counts in these key producing areas. Imagine if the farmer does not need to go through an agent and is able to sell against a buyer on the exchange. The farmer typically will earn more, increase his income, increase his livelihood, and that stimulates a very good cycle, in the sector. So the farmer has more money to reinvest into the farms. He has more money to make from the farms, improving his livelihoods, and that transfers to the rest of the value chain. So those two key interventions, farmer engagement and training, and significant expansion in warehouse infrastructure, market infrastructure around these key producing areas. These are some of the places that FX is playing currently.
All right, thank you very much, Yusuf Ogunbiyi, for sharing your thoughts there with us. We do appreciate. We take a moment now.
Thank you very much. Yep.
We take a moment. And let's look at the markets now. Well, Eddie, we saw some green there yesterday, but wondering how sustainable that is. You did listen to Bolaho this morning. I guess most investors are channeling their attention now to the fixed income market, and that might remain till the first half of the year.
Well, Chimi, yeah, I mean, yesterday it was largely Dangote Cement that drove the market. And I agree with Bolaho, because right now there's really nothing driving the market. We're still waiting for some earnings. And even if those earnings come, how long will it sustain the positive sentiment in the market? So investors are channeling their attention to where they know that, okay, yields are better in this space, and at least they're sure of not losing money right now in that space, unlike the zigzag or the ding-dong movements, like you would say, in the equities market. But let's talk more about the market with Tajuddin Olayinka, a stockbroker at Valmont Securities. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Yeah, good morning.
So yesterday, Ardova notified the NSE of its proposed 60 billion naira bond issuance program. Now, do you have any details of this, and how will it impact the stock?
Basically, it goes to tell us that the market is not at the level. The equity market is not at the level where most companies can raise long-term capital for equity. So they are resorting to fixed income in order to at least temporarily cover their position. While the equity market returns to normalcy, and then they can come back and do the needful. You can also see that from what Nigerian Daily has done, trying to convert its cash, cash dividend to equity. Most companies cannot raise money in the current state of the equity market. And so that is a bad omen. It's not something that is scary at all. So, talking about Ardova is basically because, they also cannot raise long-term money by way of equity, because no board of a company will approve capitalism we approve equity capitalism for any company at this time. Most of them are trading at big discount to their book values. So this is a problem. And I think this has to do with so much misinformation and mispricing, around the equity market. The state we have the market now is not something that should be. It's incongruent with the full state of the market. It's what the state of the market should be. There is so much misinformation coming from analysts and the mispricing coming from traders and investors alike. Fixed income market or rising yield do not produce the kind of result we are seeing in the equity market. It's a misnomer. Something is fundamentally wrong with the market of finance. So I can tell you clearly that by the time market comes up to its senses, we won't be seeing what we are seeing. Rising yield in the fixed income market did not produce the kind of result we are seeing in the equity market. There is so much misinformation and mispricing. And because the equity market itself is an adjusting market, in the long run, when all these companies are able to adjust to reality of cost and the current cost pressure, equity does it better. So I'm thinking that something is wrong with the market, and once the market comes back, we will not have the best, best of our equity market at this point.
All right, Mr. Olayinka. Well, we'll also hope that, there will be some rebalance very soon in the markets and everything goes back to normal. Thank you for your input on the program. Tajudeen Olayinka is a stockbroker at Valmont Securities. Now, unfortunately, because we've run out of time, we don't have so much time to go through the numbers, but Dangote and MTN Nigeria drove the market yesterday. Let's see what happens in the market today, Chimi.
Well, Tajudeen seemed to be quite emotional about that. I don't know what is wrong with the market, but it's market fundamentals. And hopefully, just like Bola Hos said, perhaps in the first half of the year, we'll probably see some changes. So for investors in the equities market, perhaps if you have that risk appetite, you can just remain there. And for those who want to, make some profits, quick ones, can go to the fixed income market. We might probably consider that, Eddie. All right, we'll take a break. And when we come back, we'll do an opening call to London. All right, let's look at what's happening out there in the UK. Let's talk to Juliana, our correspondent there in London. Good morning, Juliana. Well, Uber is in the news today. It says it will give its 70,000 UK drivers a guaranteed minimum wage, holiday pay and pensions. About time, isn't it? But is the battle over?
Well, I would say yes, when it pertains to UK drivers anyway. This is a massive, massive case. Big news story here in the UK. It's a corporate David and Goliath battle, and we all know who is victor there. So it is a good day for the 70,000 Uber drivers. This goes back to a Supreme Court case which was lost last month. A judge ruled that these third-party contractors were indeed drivers, were indeed employers for Uber, and that they were entitled to receiving full benefits as you would get in any kind of corporate back office. So as you said, they're now going to be entitled to receiving the minimum national wage, which I believe is about £8.56 an hour here in the UK. That will rise to £8.71 next month. And from today, they'll also be receiving holiday pay, and they'll be entitled to enrol into a pension scheme. This is part of a massive, wider discussion about the gig economy. The gig economy has become particularly popular over the past 12 months during the pandemic, because a lot of people do like the flexible conditions of being able to clock on and clock off wherever you like. But of course, if you're working under increasing pressure and under intense hours, then I suppose, you have to be given some of the benefits that a regular employer would be given. And so Uber has lost last month's case. It's been welcomed by the business secretary, Kwasi Kwarteng, and it's also been welcomed really by Uber, who believe that, this is the beginning of a new chapter, and we'll have to see what ramifications this has across the world. On the New York Stock Exchange, Uber shares closed down 1% yesterday, as I believe investors are kind of soak in what this means in the long term for the ride-hailing app's future.
It's actually a welcome development. Well, energy watchdog Ofgem plans to make UK suppliers refund surplus credit. What does Ofgem seek to achieve with this?
Well, it's been a difficult 12 months for many people across the world, particularly here in the UK, as customers have struggled to pay their bills, and they just want to have more of a fair balance. Here in the UK, if you pay your energy bills via direct debit per month, you are paying an estimate average, because they don't know exactly how much energy you're using. So typically at the end of a 12-month contract, you could have 60 or even £100 in credit. And what's been happening over the past couple of years is a lot of energy suppliers are keeping it. Ofgem, the regulator, believe that some of these suppliers are sitting on about £1.5 billion worth of overpayments. And rather than them being paid back if a customer asks for it, in 2022, they want to make a zero refund policy, which basically means at the end of every year, rather than that going to credit in another contract, you are given back that money. This is likely to affect 20 million customers and could potentially lead to £60 per customer being received via a refund.
All right, Juliana, we'll leave it at that, and then we hope to get more update from you later in the day. Thank you. Okay, let's look at the crypto market. Well, Ladi, I don't know whether I can play in that crypto market now, looking at what's happening in the fixed income market. Okay. I guess that's where the attention is going to.
Yeah. Well, the crypto market's still looking okay. Bitcoin just still on that pullback. The market cap about $1.7 trillion, up 4.30%. 24-hour volume, $129.79 billion, down about 27%. Bitcoin dominance, 60.67%, down about 0.04%. Let's look at price of Bitcoin, 56,255 as at 8 a.m. this morning, up about 4.18%. 24-hour volume, $52.768 billion. Ethereum, 1,784.77, up 2.16%. 24-hour volume, $21.648 billion. Now look at the top alts by market cap. You see them doing well. ADA doing really well this morning. Let's talk to Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Ladi. Good morning.
Good morning. Great to have you.
Yeah, so, thanks for having me on the show. Yeah.
I see XRP moving this morning. I know they have that issue with the SEC in the U.S. The SEC is saying they are a security, and that has kept the price down for a while. But I see this price movement. What's happening?
Yeah, investors are betting that the swing might go to Ripple's side. Don't forget the fact that Ripple is fighting the battle very hard, saying that for Ethereum and Bitcoin not to be regarded as a security, they should also not be regarded as security, because for the fact they've been tagged as security, it means certain crypto exchanges, in fact, almost all crypto exchanges would need authorization to trade security assets. So that is really what's putting the dark cloud on the XRP asset. But the asset has a very good fundamental. It has a faster processing power in terms of transactional speed, and that is why a lot of payment firms, including Flutterwave, have partnership agreements with them. So I think that the case is still lingering on, and that's why we've seen the price trading at 0.45 being settled. But the next few weeks will really determine the direction of Ripple. Any upside will show that Ripple has the case to win. Then we spoke about Cardano. Yeah, Cardano,
up about 25%.
Surprisingly, is moving very fast, and that's because there's so much fundamentals going for it. First, a lot of African CD assets are undervalued, very affordable. Now it's priced at $1.23, and within 6 weeks, it has rallied by 40%. And that has been because it has unique fundamentals. It recently gone through certain upgrade called the fork, and that has really given it more buying pressure. Then just recently, again, about a day ago, Coinbase Pro announced that you could trade it on their institutional platform. So that exposed institutional buying, and that's why we're seeing the price rallying high.
Okay, so why is the SEC not considering other altcoins as securities?
The Ripple is governed. The Ripple has a kind of centralized authority based on the SEC arguments that makes it like like the way you run fiat currency, where you have the central bank authority. But the case Ripple is saying is that yes, that was the original design, but now it has been handed over independently. So that's the case that they're battling presently. Yeah.
Okay. All right, Olumide, thank you so much. Always great to have you. Thank you. Do enjoy the rest of your day. So, Chimi, there you have it. Top 5 gainers backed. ADA up there, 23%. HOT, Holochain, 23%. Looking good. Downers, Mana, these ones have had incredible runs. Mana, CHZ, the NFT saga keeps going, but now they're doing some kind of pullback at this moment.
All right. The Bitcoin, of course, slowed, hovering around the 55, 56, and then the altcoins going up. And you talked about coins that are regarded as security. And if you were to tell me now, which of the coins now should I now look at? Basically, for me, I would think about those that have that security from the SEC.
Yeah, but at the end of the day, it's the SEC only considers XRP as that. So we'll see how other alts play out in the meantime.
All right, we'll see about that. Thank you very much, Ladi. And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Thank you for watching.